Hi, this is Doug English with Act Advisors with your January 2023 update. Well, this year is starting out great, and all the asset classes that were beaten down last year really bounced back very nicely in January. So you'll see the S&P was up about 6.2% for the month. The bond market was up about 3% for the month. Now, our strategies where we've used the bond and the stock rotation were particularly effective, and you're going to see in your accounts, depending on those more conservative, will be about 5% for the month. Those more aggressive made about 7% in January alone. Now, the stock and bond rotations change depending on the momentum that we see in the areas that we cover for each one of them. The stock rotation went into mid caps a couple of months ago, and that area has continued to be really strong. So we're just thrilled with the returns there. There'll be no change in the stock rotation for February. In the bond rotation, we've had a lot of different changes throughout the months. Last month, all three positions made you nice returns, but we saw additional momentum in long-term treasuries and preferred securities. So you're going to see two positions sold from the bond rotation, and those long-term treasuries and preferred stocks added in, and the municipal bonds that were already there will continue to be there. We are optimistic about the returns for both the stock and the bond market this year. So we are delighted to see some beginning of the year momentum. And as you may know, the January effect, when you see a January that's done really well, in addition to the Santa Claus rally, in addition to the first 5 days of the year, historically, that is an 87% probability of having a double-digit stock market return this year. So thank you very much for your business. Thank you for staying with us through the difficult year of 2022. We think good things are ahead. Volatility is almost certainly ahead as well. So don't be surprised if the road is a bumpy one, but with an upward general trajectory. Thanks very much for your business.